So you're thinking about moving to Las Vegas, Nevada and purchasing a home? But with all the added expenses of owning a home, you're looking for ways to keep the extra costs down to a minimum. Well, then this video is for you. That's because we're going to discuss 10 factors that impact the cost of homeowners insurance premiums here in Las Vegas. And towards the end of this video, I will share with you the most optimal ways to lower this necessary line item in your budget. So let's get after it right now. Hi, my name is Mark Pepe, and I absolutely love helping people discover all things Las Vegas, including Las Vegas real estate. If this is the type of content that resonates with you, make sure you subscribe here below and tap the bell for notifications so you can be the first to learn about the current market here in Las Vegas, with so much evolving almost daily. We are passionate about removing the stress of relocating to a completely new city and state. If you're thinking about making that move, whether it be 9 days or 9 months, feel free to give us a call, text, or email. All that information is in the description below. You know, whether you're buying a home, a new home here in Las Vegas, or already own your own home insurance is usually part of the journey. Most standard policies cover your home structure, personal belongings, and additional living expenses if you experience a covered event. That typically includes inclement weather and burglary. Most policies also offer liability protection in case someone injures themselves on your property. Now, while there are no laws that mandate homeowners insurance, virtually all mortgage lenders require it. The premiums vary, while a variety of things can influence your cost. In Las Vegas, homeowners pay an average annual rate of $1,512 for the coverage level of $300,000 for dwelling, $100,000 for liability protection, and a $1,000 deductible, according to insurers.com rate analysis. This is $1,070 less than the national average of $2,582. So here's a rundown of the top factors that impact insurance premiums, starting with number 1, which is your location. When determining your rate, insurance companies assess your perceived risk or the likelihood you'll file a future insurance claim. If you live in an area that's prone to adverse weather events, you'll likely pay more than a homeowner who doesn't have those risk factors. In California, for example, many insurers tack on a surcharge if your home is located in a high-risk area for wildfires. These surcharges can range anywhere from 15% all the way to more than 300%, according to the California Department of Insurance. In hurricane-prone Florida, the Insurance Information Institute projects that the annual cost of an average home insurance policy to be more than $4,000. Fortunately, Southern Nevada is not prone to any significant natural disaster outside of some annoying windy conditions, which is part of the reason why Las Vegas is over $1,000 less than the national average on premiums. Number 2 is the size of your home. Most insurers will review the size of your home when calculating your premium. This makes sense if you file a claim. It will cost them more money if they have to repair or rebuild a larger space. As such, greater square footage properties usually translates to a higher premium. Number 3 is the condition of your home. Most insurers will conduct a home inspection before you can obtain or renew your policy. This usually involves reviewing the exterior, especially the roof, along with the home's electrical, HVAC, and plumbing systems. If an inspection reveals significant issues, you might be hit with higher insurance premiums. An insurance inspection isn't always necessary, but is customary for older homes and homes that are being financed. Speaking of older properties, insurance for a home that's more than 30 years old is typically 75% higher when compared to a new home. In some cases, insurance companies may require you to purchase special coverage or add on specific insurance riders or endorsements. Decay, safety issues, materials, and historic restrictions all can increase your premium. Fortunately, the Las Vegas Valley offers many newer communities, which helps keep the cost down. Number 4 is the replacement cost of your home. Now, replacement cost refers to the amount it would cost to rebuild your home with construction materials of similar type and quality. Your home's replacement cost or rebuild value is based on many factors, including your home's age, square footage, architectural style, number of rooms, and local rebuild costs here in Las Vegas. Replacement cost is not the same as your home's market value, how much it sells for on the market. Instead, your homeowner's insurance premiums will be based largely on the rebuild cost of your home, and therefore the amount of dwelling coverage you need. Number 5 is if you own or finance your home. If you own your home outright, you can decide for yourself how much insurance you need. The level of risk you're willing to assume and the amount you're willing to pay in premiums and deductibles is entirely up to you. It's a different story when you have a home loan. Most lenders require that you maintain at least enough home insurance coverage to cover the mortgage. Every lender is different, so be sure to understand your minimum requirements. If you own your own home outright, you can make premium payments directly to your insurer. If you have a home loan, you may have the option of wrapping or impounding your insurance premium into your monthly mortgage payment. Those funds are held in an escrow account, and when your premium is due, your lender will pay it for you on your behalf. Number 6 is your level of coverage. Now, in general, the more robust your coverage, the higher your home insurance premium will be, and that goes for any insurance policy. You can base your coverage amount on how much it would cost to replace or repair your home structure. You can estimate rebuilding costs by looking at your home's square footage and the cost of materials along with labor. In terms of personal property, take inventory of what you have and ballpark the total value. You may choose to add extra liability, personal property or dwelling coverage to beef up your policy. Things aren't covered by standard policies, such as floods, earthquakes, and sinkholes, will require additional policies. Number 7 is your deductible. An insurance deductible is the amount you pay before your insurer kicks in their share. Now, a higher deductible usually works out to be a lower premium, and then vice versa. If you do opt for a higher deductible, it's a good idea to have that amount on hand should you need to file a claim. A strong emergency fund is important so you don't have to worry about the out-of-pocket expenses or costs for repairs before insurance kicks in. Number 8 is previous homeowners insurance claims. If you or the home's previous owners have a history of filing homeowners insurance claims, you may encounter higher premiums. Remember, premiums are based on how risky it is to insure your home. Prior insurance claims could be seen as an indication of risk. Now, not all types of homeowners insurance claims affect premiums in the same way. For example, in a 2021 survey, found that a single weather-related claim increased premiums by an average of 16%. However, fire-related claims were on the other end of the spectrum, bumping up premiums by 29%. That's a big difference. Number 9 is your credit score. Homeowners insurance companies may consider your credit, but the information they check isn't the same as the credit score lenders use. Instead, they use a credit-based insurance score, which is meant to help predict your likelihood of filing an insurance claim. It's one of the many factors that could affect your premium. Taking steps to improve your credit score could reduce your homeowner's insurance rate. That includes paying your bills on time, reducing your debt, and limiting how many new credit accounts you apply for. And last but not least is number 10, additional risks on your property. Having certain features on your property could increase your perceived risk. If you have a trampoline, a pool, hot tub, or dogs, for example, homeowners insurance may worry that there's a higher chance of someone actually getting hurt on your property. They may require you to purchase extra liability insurance as a result, which could cost you more. So, given these factors, how can you reduce your homeowner's insurance costs? Well, I'm glad you asked. Here are a few simple ways. You can begin by increasing your deductible. Be mindful of how often you file claims. Reduce your risk by installing a security system or other safety measures like a sprinkler system. Do away with things like a trampoline or tree houses, which could improve your risk profile. Bundle different types of insurance, such as auto, with the same insurance company. Look into other discounts like rate reductions for veterans, students, seniors, alumni groups, and more. Make sure the policy only covers necessary items. Improve your credit. And last, shop around for a better rate every year. Well, I think this gives you a good overview of the top 10 factors that impact the cost of homeowners insurance premiums here in Las Vegas. As you can tell, many different factors go into the costs. Understanding what they are and how to use them to your advantage can help bring down your total spend and keep additional homeownership costs at a reasonable amount. I hope you enjoyed this video and found it informative. So please like and share it. Please subscribe below and comment if you have any questions or found this video helpful. Also, don't forget to check out our other videos on moving to Las Vegas and the surrounding areas so you can continue to get a realistic sense of what it would feel like to live here in the Las Vegas Valley. So if you're still planning on moving, whether it be 9 days or 9 months, give us a call, shoot us a text, send us an email, or even schedule a Zoom appointment here in the description below. We can't wait to help you make a smooth and a stress-free move to Las Vegas. So until next time, we hope to show you around town very, very soon.